Hi friends, how are you all? This is Pawan Sharma. In this video, today's video, we will be discussing about how to find a multi-year breakout. Understand there are a lot many type of breakout. It could be a pattern breakout. So if I just say the first one is a pattern breakout pattern, which means you can look out for rectangle pattern or maybe any kind of triangle pattern, ascending triangle pattern, head and shoulder patterns. There are so many patterns. So a kind of breakout where a pattern is considered, it is known as a pattern breakout. Second one is level breakouts. So maybe a particular stock is trying to break 500 level, and since long the 500 level is coming as a crucial resistance. So that way that become a crucial breakout level. The third one is where we are looking out for maybe a range breakout. A stock is trading into a range and then it give a breakout. This range can be for 1 month, 1 week. It could be for 1 year also. So accordingly, we'll take a trade. And then the most profitable one is the fourth one is a multi-year breakout. Multi-year breakout. Why it is known as a most profitable one? Reason being, the stock was consolidating into a particular range for a very long time, and I'm sure that during that time the stock might have tried lot many times, and during that course many times the investor failed to provide a breakout to that particular stock. But slowly the investor gained confidence, the new investor joined in, maybe HNI, FIIs, they too joined in, and then the stock started to move up, and then after a multi-year, like maybe after 5 year, 10 year, the stock has given a breakout. It indicates that now the stock is ready to make a new highs. So the stock which we will be taking an example will be IITL. IITL. Why we are picking the stocks? Let's find out. And friends, if you haven't subscribed my channel yet, please go ahead and subscribe to it, and do not forget to press the bell icon, and please do not be miser while pressing the like button. That way you can support this video along with my channel, and I need that from you. So let's see that. First of all, understand, when you are like sitting over the weekend, maybe just like today I'm recording this video on Saturday. So over the weekend, do not use 5 minute, 15 minute, 30 minute, 1 hour, 4 hour time frame. Don't use them, because these can be used only for intraday. And I would also suggest that you should not use 1 day time frame also for analysis. Reason being, in 1 day the maximum chart or maximum time frame you can look out for, like in the past, is like not more than 2 years, because beyond that you can squeeze the chart to the maximum, but you will like lose the clarity from that chart. You cannot find the support levels, you cannot find the resistance level, and that way you cannot make any decision. And of course guys, this is my personal analysis. I'm just teaching you. If I'm just discussing any level here, you must understand one important, that you have to do your own analysis and you have to take consultation with your financial advisor also before taking those. So now let's 1 day. Now the minimum time frame you should use over the weekend is 1 week or 1 month. Okay, 1 week maybe 5 or 6 years, 1 month beyond that also. So let's look at the 1 week time frame in IITL. So this is 1 week time frame I'm looking at. And during that 1 week, if you look at here, in 2013 it tried a breakout of 1900 and failed. 100 is the level here, so it tried to break out on the 100 level, and then again it was successful in 2018, but post that again it fall down and it made a low of 46, and then again it gave a breakout of 100. And then now you have to consider this part very carefully. A stock might give a breakout multiple times. Okay, the stock, now this is 60, and now look at here, it rises to 150, but it did not stay there even for 1 week. It was continuously falling. It tried to break this level, it tried to hold this level, but it could not make new low high. So what it did, it rises. The point number one is rises. It rises, then it fall, and while it was falling, it create a support, but it could not create new high. Okay, and that is a sign that the momentum is not there. The stock might fall further, and you see the stock fall again. It tried, and this time if you look at here, it gave enough time to consolidate, and this time it was making slowly higher high, lower high, and then suddenly it gave a big breakout. Okay, now if I just change the time frame to 1 month, now you'll see a clear breakout that the stock was listed in somewhere in 2011, and then after making a high of 288, it went down till 50. Again it rises and tried make a high of 160, but it could not hold there. Again made a low of 46 and then rises back. Again it consolidated toward these levels. Here also, if you look at here, it fall, and here a new high, a new high, a new high, a lower high, a lower high. And if you look at here, you need such patterns whenever there's a breakout. This indicate that a stock is trying to hold these levels and now it is ready for a breakout, and then you see a big breakout. Now what is our next target? Our next target here is, first of all, understand the rise is there, so we will continue, we can continue, or we can enter with the rise, rise. And while the stock will continue, we'll keep on shifting our stop loss also. Let's say we entered at 177 or maybe 178 to 180. Okay, so where we are entering, we're going to put our stop loss immediately. We're going to put our stop loss of 174. We're not going to take more than 5 point, or maybe you can 173. And if it closes above 180, if it closes above 180, immediately put your stop loss to on cost, because this will be a risky trade. Okay, you should not lose a single penny in risky trade. And if it keep on rising, keep on trailing your stop loss and go with the flow. Go with the flow, and once it start falling back, immediately quit, because after this rise, I'm sure that it's going to take some support here. So what I'm expecting here is the support will be somewhere around 200 level. So from 180 to 200, you can have your first target. Then 240 will be the second target, and then 280 or 290 will be the third target. So this is how we have to move on. And understand this part here, that after this breakout, the stock will find a new support. So the new support could be at 180 level also. It could be at 200 level also. So accordingly, along with the when the stock is rising, you should keep on chasing your stop loss or trailing your stop loss around your cost levels. So this is how we identify a trade, by using the 1 month time frame, by using the patterns, by using the levels. If you look at, I have plotted so many lines here, and this is here, and in between also I have plotted some retracement levels also. And now the most important part is to understand the next available support. So either the support is coming around at 160. So if tomorrow, if it's, understand, this is the high, so this is a high, put a line here. If it break this line, on Monday, Tuesday, Wednesday, and if you have taken a trade around maybe 177 or maybe 180, you put your stop loss around 175, because that way we'll keep a minor stop loss, which is absolutely fine. Do not keep big stop loss, and do not hesitate when the time comes that if it break this line here, do not hesitate to quit from your position. And then the next available support could be around 200 level, that will be 200 to 220. So if it break that level of 180, 190, 200, then put your stop loss, so I would say around 195 or 198. That way you will be in profit, and you can quit immediately if it start breaking the 200 level. So all these things which we have discussed just right away, all these things you have to follow step by step. It is just an example, but in future trades also, anywhere when we are looking for such kind of breakouts, please understand that such kind of movements will give you a really big profit in a very short span of time. But with a star, that the risk is always there, because if it take a turn back or if it reverses, then it can hit your stop loss, how low you can keep. So do not keep your stop loss too low. Just keep it like, maybe if you're taking 100 quantity, then 500 rupees or 700 rupees, so 5 point or 7 point should be your stop loss. Even if it come back, please do not hesitate to quit. And if you have more risk taking capacity, you can take your position accordingly. So hope this small information will help you in finding stock in your future also. I'll see you into my next video, guys. Have a nice day. Take care. Bye bye.